Hi, everyone. Today, let's go over the earnings calendar for this week. There are a lot of heavy hitters coming up. Then we'll go over the economic calendar. Then we'll talk Fed rates. And then we'll take a look at Max Payne for this week. Then we'll get into the charts. Then we'll take a look at my positions and go over my thoughts for next week. Definitely go check out the Patreon as well as the Twitter. I can see a couple of you have followed me over there, and I appreciate that. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Looking at the earnings calendar, there are a ton of big companies coming out this week. So looking at Monday first, Coca-Cola, that's the big one. Not a ton of other major companies on Monday, but Coke is always interesting. And then looking at Tuesday, we got some heavy hitters here. So Microsoft, Google, Visa, Pepsi, McDonald's, UPS, Texas Instruments, New Era Energy, Verizon, Raytheon, GE. And I like to watch 3M, Chipotle, and General Motors. So big day on Tuesday. Moving over to Wednesday here, you can see Meta, always a big one, Boeing, American Tower, definitely interesting. And then you have Walmart Mexico, as well as General Dynamics. Moving to Thursday, just keeps going. We have Amazon, Microsoft, Eli Lilly, Merck & Co., AbbVie, AstraZeneca, T-Mobile, Comcast, Bristol Myers, definitely interesting, Honeywell, Intel, Amgen, Caterpillar, that's always a good one, Altria, Northrop Grumman, Activision Blizzard, we'll see how that's doing as they prepare to get acquired by Microsoft. And then as we move into Friday, it does cool down a little bit. We have ExxonMobil and Chevron, the two big oil giants. Colgate-Palmolive, consumer staples company, that might be a little bit interesting. But that's really it here on Friday. So heavy hitters Tuesday, Wednesday, Thursday this week. And then moving on to the economic calendar, we have a couple of interesting things this week. Last week was very calm, so this week makes sense. There's a couple of things. Consumer confidence here on Tuesday, that's always interesting. New home sales. Looking at Wednesday, we have durable goods orders. That's always interesting. It's been declining here, so that's some good evidence if there is economic slowing. Obviously, we think there is on this channel. We've been talking about that for a while. We'll see if that continues. Last time was negative 0.1, this time's negative 0.2. If this comes in below expectations, that could really be an indicator for markets. Moving over to Thursday, we have preliminary GDP for Q1, as well as initial jobless claims. This continues to tick up, came in higher than expectations last week, and it's expected to go up another 5,000. And this same day here, we have PCE pricing, as well as pending home sales. And then on Friday, we have core PCE index expected to go up 0.5%. And then headline PCE down here, 5% and 0.3 month over month. So we'll be watching those closely as well. And then later in the day, we have Michigan consumer expectations and Michigan consumer sentiment. We have real consumer sentiment earlier in the week, but it's good to watch these Michigan announcements. They're usually a little bit different, and they do tend to provide some good evidence for the markets going forward. And then another one here, Michigan 5-year inflation expectations. This has been drifting up, and it will be interesting to see what they say going forward. Moving over to Fed rates, this continues to go higher. You can see last week it was at 78% of 25 basis points. Now we're at almost 90%, so this is just about a lock here in my opinion. We're about 9 days away, so it does make sense that we're getting very close to that 100% reading. Looking at June here, still expecting that pause at that level, but there is a rising percentage that we could get another 25 basis points. You can see last week it was only at 16%. And this is now at 23.4%, so drifting higher. But it's worth noting that the pause percentage is going higher as well. So still looking at a pause, definitely interesting. And looking at July, if we get 25 basis points in June, we're then expecting a cut potentially, but most likely this will still be a pause here in July. And this has been drifting up steadily as well, 47% last week. Now we're at 60% here for July. Moving over to Max Payne for this week for the Friday expiration. You can see Max Payne is all the way up at 410 this time. But of course, this is not a third week expiration. You can see total options in the market is only at just above 1 million. Put call ratio still very high at 2.5, but this matters less when there's so many less options. For the Friday expiration of this week, we had about 4.6 million, so less than a quarter of what we saw for this week, which makes sense. It's almost always the case. Third week expiration is the big one, which is why I correctly thought that we weren't going to tank. There was just too many puts in the markets. But now we only have 734,000, which is still a fair amount, but it's nothing compared to what we saw last week. And this really gives the markets the opportunity to start pushing into these options here. Still some pretty high put walls at 410, 400, 405. But like I said, there's just not very many options in the market, and it would make sense if we started to drift into this zone. So keep an eye on this one. Not a lot of options. Call wall 416, first put wall 410. Really, I think we're probably going to go lower, and we'll keep covering this as it changes throughout the week. Moving over to the charts, starting with the S&P 500 here on the weekly view, you can see we got a doji on the last candle of the week. Looking at the MACD here, you can see momentum is definitely starting to fade. The momentum level is at 18.78, which is a step up from 17.4. But you can see here, when we were really going higher, these were pretty big, significant steps. We went from 25.9 up to 35.6, up to 43.6. So big steps as we were going higher. And here we went from 17.4 up to 18.7. So a little bit over a point higher in terms of momentum. And really what this is saying to me is that this momentum is getting very faded, very weak rally. It's still a rally, so you do have to pay attention to that. But it does seem like we could potentially get a step down in weekly momentum next week. And if we do, that's going to put us into the territory where that's going to make me think that we're probably going to be pushing back down into this area of highest volume, back around 3950, or at least to about this 4,000 level. You can see lots of volume done in this zone. Lots of volume done right where we are, but there's kind of a vacuum between where we are right now and down to about 4,000. So if we push lower, it's probably going to happen fairly quickly. Then we'll get back into 3950 to 4,000, and then we'll see what happens from there. Overall, candle of indecision, slightly bullish, but my bias is starting to look more bearish than it did last week. Moving over to the daily chart, you can see similar thesis. We were watching this rising wedge. We have since broken down from that level, but we haven't really broken down to new lows. Looking at VWAP sitting around 4073 right here, which is kind of in this area of no man's land in terms of volume. So if we do get to VWAP, like I said, I think we're probably going to get down to this area of highest volume on the daily chart, sitting at 3980. Momentum definitely moving bearish, very slowly into bearish territory, but it is moving. And if we get another step down on Monday, that's likely going to turn this momentum bearish. We'll see a cross on the EMAs here, and then this will really start to look more bearish going into next week. Moving over to the NASDAQ here, similar thesis, rising wedge type pattern on the weekly chart. We've been sideways for 3 weeks in a row here, and we did get a slight step down. Still kind of a doji, still holding above this trend line that we're watching. Momentum starting to tick towards bearish, which is interesting even on the weekly chart. So a little bit weaker here on technology and growth. RSI not showing us much of anything quite yet. And this 144 EMA currently sitting at 13,151 has really been the upper limit of this rally. We tested it in the last week of March. And every time we get to that level, we do get rejection, which is the major trend line also. And I do think that's going to be really the top of this rally before we get a more significant pullback. And once this structure breaks down, it looks like we're probably going to get down to around 12,137. That's going to be where the 21 and 55 EMAs are moving just about at the same level. They'll come together next week or the week after, right around this zone. Of course, we have the 9-week moving average down here, which is currently at 12,633. So we might get a slight bounce from there, but then overall, I think we're probably going to come back down into this zone. And then just below that, we have the 200 SMA sitting down there. So overall, still thinking slightly bearish. Haven't broken this structure quite yet, but the 144 is really going to be that upper limit in my opinion. Moving over to the daily chart on the NASDAQ, you can see that momentum has turned bearish and it is accelerating to the bearish side. RSI below the SMA continues to trend lower here. You'd like to see this get below the 50 line, then we'll see what happens from there. But overall, you can see these are getting very close to looking at a cross. Once these cross up here, it's going to be pretty fast movement down to the 55 EMA, in my opinion. If that level breaks, then we're looking down to the 200, which is currently sitting at 12,027. rejection just below where those EMAs are looking to cross, which was at around 12,150. So just above that is where those EMAs on the weekly chart are. And most likely that's going to come down to the 200 SMA on the daily chart, in my opinion. Moving over to the Russell on the weekly, you can see not nearly as bullish as we've been seeing on the other major indices. We're kind of in this bear flag type setup right now. It's been holding up a little bit stronger than the others, which is interesting. It is in a lower range, so it doesn't have as far to break down, in my opinion. We're right at that 9-week moving average, which is at 1797. Can't really get above that level right now. And you can see we tested it again this week and got rejection. Could certainly push up and test this trend line one more time. That would be up around 1818. That would also correlate with the 55 and 21 EMAs. Maybe come up and test those levels and then get a bigger rejection to the downside. Momentum, on the other hand, is slowly ticking towards bullish, but it's pretty neutral here. You can see we went from negative 11 the week prior to negative 9.6 this week. Very minor steps down compared to what we usually see here if we are going to get a transition into bullish. You also have to factor in that those regional banks could be supporting the Russell here a little bit since they've been recovering, and the fear of those banks collapsing has kind of diminished a little bit. But overall, I think this is still kind of a bear flag type setup. And we've talked about this multiple times here, but if it breaks this lower range, there is a significant amount of downside potential just below these pretty long-term support levels. And really that 1696 level down here that we tested going back to the week of 20 March, if that level breaks, then it's really a lot of downside all the way down to around 1450 or so. So watching this level closely, seeing if this bear flag type setup culminates and then we get a bigger breakdown, that's going to be super bearish. So keeping an eye on this one pretty closely over the next few weeks. Moving over to the daily, there's not a ton to add here. You can see that same structure. That 21 EMA continues to hold as a lower level of support, currently at 1774. As long as that level continues to hold, we're still in this range. We also have a lower trend support sitting down at 1770, so just a few points below the 21 EMA. Momentum is bullish, but just slightly. And then above that, the 144, the 200 SMA, and the 55 EMAs are all up here, pretty much trapped between all of these three and the 21 EMA right now. Moving over to the Dow here on the weekly view, you can see we got a doji right at resistance, watching 339.11, rejected from that level. You can see tons of volume done here. We were in this zone for many weeks in November as well as January before we had that dip and then the bigger breakdown, which did end up getting bought into this zone. Now we're retesting resistance here, and if this breaks down, I would expect to see a lower low versus this previous low. And zooming out to see this volume profile a little bit better, you can see how much volume was done in these higher levels and how little volume was done in these lower levels. So not a lot of volume supporting this move higher right now. It is worth noting that momentum is still slightly bullish and we're moving in the bullish direction. So it doesn't mean that we're going to break down right now. You could certainly get the continuation. If we do take out that 343 level, then we could be off to the races on the Dow. That would be interesting. We're above the SMA on RSI as well. Another pretty bullish indicator going into next week. So key resistance, but still bullish on the indicators. Moving over to the Dow on the daily chart, the picture looks quite a bit more bearish. You can see that level that we tested and then broke down below that level. Momentum moving in the bearish direction for sure. We're below the SMA on RSI. Not a ton of volume here recently. Lots of volume at this previous low. It pushed us into this previous high. Now we're kind of waiting to see what happens. We've been breaking down slowly. Lots of volume done here. The next area of highest volume is around 334 at this previous consolidation. If that level breaks down, there's probably not a lot of support until we get into this previous consolidation, down around 318, 319. So watching this one pretty closely. And in my opinion, we are short-term bearish here on the Dow. Moving over to ratios here, we have the NASDAQ divided by the SPY. We've seen a bull flag type setup here. We're at the 200 SMA on the weekly chart, as well as the 9 EMA here, waiting to see what happens. Momentum is still moving bearishly. If we do break out of this bull flag, I would guess that we're going to retest the high of the flag, hit this 144 EMA, and then I would guess that we're going to pull back, giving us a more double top style pattern. And then we'll see growth and technology start to lead us to the downside. If we are going to get that overall pullback, which it does look like we will, it's worth noting that we're at the SMA here on RSI. We could get that bounce, which would give us that double top, and then we'll get the continuation lower. This is still a longer-term downtrend. We broke out of the downtrend. We're not really at any key resistance or support levels here, but like I said, I think this is the most likely case. We get a bounce, double top, and then a continuation lower. Looking at the SPY versus the Russell, you can see clear outperformance by the SPY here recently. Pretty key level, and we did get back below that level at 2.31. If this continues lower here, maybe we see more outperformance from the Russell. That would be interesting. Momentum did turn slightly bearish here on the weekly chart, so indicating more Russell outperformance in the short term. So we got the NASDAQ setting up to outperform in the short term and then break down. And right now, the Russell is looking to outperform in the coming weeks. Moving over to the SPX divided by the M2 money supply, you can see similar to the SPY, we are at key resistance below the 144 EMA, just above the 200. And if this trend line breaks down here, then we're definitely looking at some more downside. Putting this on the percent scale, you can see that would be about a 1% move down to these levels. But realistically, this is probably going to move lower if this ends up being a double top on this chart, which it does look like it's going to. Momentum basically flat over the last 2 weeks. And moving down to the daily chart, you can see what this looks like right on that trend line. Looks like we've kind of already broken it, retesting that level, and it looks like we're going to go lower here, moving to cross into bearish momentum on this chart. Overall, SPX versus M2 money supply looks equally bearish and like we're going to move a fairly significant amount down to this 55 EMA. And moving over to the M2 money supply rate of change, you can see in February 28th, we saw a rate of decline of 2.35%. We haven't seen a decline in the M2 money supply for a while, and you can see looking at these statistics, M2 has been growing quite fast here recently. During COVID, it was growing extremely fast. And then here recently, we crossed into negative territory. The first time we went negative was December of this year. Went more negative in January, more negative in February. And once we get the data for March, you would expect that this is going to continue lower. The Fed is trying to tighten the money supply. And this is really the actual effect of those policy changes. Moving over to the SPX divided by gold, we ended up getting a little bit of a continuation. We talked about that happening. Came into this level of support. As that level held, we continued higher. Looking to test VWAP here, sitting at 2261, so a little bit higher than we are right now, indicating a little bit more upside for SPY versus gold. But once we get into these EMAs, probably the 21 EMA and 200 SMA, once we get into that zone, I would expect we'll find more sellers, and then people will be looking to buy up gold. The issue here with gold right now is that we're looking at 25 more basis points in May, and interest rates going higher is not good for gold. And like we talked about, that's at a almost 90% chance now. So momentum on this one, looking to turn higher, being patient to see once this ratio hits resistance and starts to roll back over, that's probably going to be a better time to start looking at gold as a hedge against some downside in the S&P 500. Moving over to the SPY divided by the equal weighted S&P 500. This is a new indicator that I added to my watch list. And you can see here, we've had a huge rally. The SPY has been outperforming the equal weighted ETF, indicating that the top players in the SPY are really driving this rally here. And now we're at kind of a key resistance zone. You can see these two trend lines that I added to the chart. And we're at this major resistance here that I'm watching, which correlates with the 144 EMA and 200 SMA. And if we break down from this level, which it does look like we're going to here now, as we have 2 weeks of bearish momentum, RSI is starting to pull back. And if this pulls back more significantly here, you would expect that both of these markets are going to move lower. So keeping an eye on this one, definitely seems like key resistance and that we are looking for a pullback going into next week. Moving over to Apple and Tesla, you can see the rising wedge on Apple. We talk about it just about every video, and it looks even more clear here on the weekly chart. Waiting for this breakdown. We'll see that probably in the next week or two. We don't have earnings next week, so maybe they'll pause in this zone until we get their earnings. But overall, still expecting this to break down at least a little bit. Tesla, on the other hand, I think just about everybody sees this high, lower high setup. The weekly chart makes it even more clear. This looks super bearish going into next week. Weekly momentum moving into the bearish direction. Weekly RSI got below the SMA. We've had multiple steps up in volume here over the last 3 weeks as the price continues to go lower here. So looks super bearish on Tesla going into the next week. Moving over to staples versus discretionary, you can see staples broke out of this bull flag setup. Talked about that multiple times. Looking at 77.50 as my price target, that's going to be the high from this entry point of the bull flag setup. If we break that level, there's certainly some levels above there, but that was my initial price target. If we break that level, you could probably see a push up to $80. That would be interesting. But this is my initial price target, and you can see multiple tops at that level. So there's probably going to be a lot of resistance there, in my opinion. So we'll see what happens when we get here. But you do have a low, higher low setup, big rally here. Momentum super bullish, RSI super bullish. Overall, waiting to see what happens at that 77.50 level. Discretionary, on the other hand, continues to wedge here, waiting to see what happens. You would guess that this is going to break down just based on everything else we see in the markets right now. We're also below the 200 SMA on the weekly chart, as well as the 55 EMA and the 144 EMA. So all the bigger EMAs and SMAs say bearish, but momentum is still slightly bullish and RSI is still above the SMA here. And until we get that more significant breakdown and we see what's going to happen, it's a little bit hard to predict right now. It does seem like a high, lower high setup. And if we break this midpoint here, then we're going down to this previous low. And if that breaks, then we have a lot of downside potential. That low wicked the pre-COVID highs, and you could even see down to 123.45 would be interesting. That's that previous consolidation before we had that breakout, as well as this consolidation before we had the breakout higher here. So tons of volume also at the 119.65 level, which would be interesting also. Overall, I still think this is going to break lower on discretionary. Moving over to transports, we talk about this one quite a bit here. We were watching this bullish wedge coming into this resistance level. Did break out of it briefly and then ended up closing below it. You can see that weekly candle ended up being a wick rejection, but slightly bullish. Momentum is moving in the bullish direction as well. So if this breaks out here, that might be an interesting bullish indicator going into the next week. Hasn't quite happened yet. We're also at the SMA on the weekly chart. We did set up a higher low on the RSI, which makes sense considering that bullish wedge that we saw. If we get above the SMA, momentum continues higher here. That would be interesting, generally indicating that the Dow should be going higher as well, which does correlate kind of with what we saw on that chart. Moving over to semiconductors, you can see this head and shoulders that we were watching. This is coming off a very bullish run that we've seen here recently. And you can see just how much lower this most recent top is compared to the last top. Slight push higher, momentum is fading, daily momentum moving towards that bearish territory. RSI has already crossed below the SMA. Daily RSI showing bearishness, bearish momentum. Overall, looks like semiconductors are due for a more substantial pullback, which generally indicates that the overall markets are probably going to pull back, as this was one of the most bullish sectors here recently. If this breaks this major trend line, looking at the weekly chart, you can see the 144 EMA and 21 EMA sitting down at 235, which would be about 13 points of downside from where we are now. Probably not all in 1 week, but it does seem like that's a decent price target based on this topping pattern that we're seeing here now. Moving over to stocks above the 20, 50, and 200-day averages, you can see the 20-day actually had a pretty substantial pullback over the last week. We've been talking about this breaking down here recently. 50-day still holding up pretty strong, still above the 9 EMA on the daily chart, which is interesting. But momentum on the 20-day, moving bearish, RSI definitely bearish. 50-day slowly sloping down, still above the SMA here on RSI, so still neutral on the 50-day average. And then when we look over at the 200-day, you can see we are in a topping formation, slowly sloping lower. We're below the 9 EMA, but above the 55, waiting to see this have a stronger pullback. Momentum definitely sloping lower. RSI has crossed the SMA and is going lower, waiting to see this hit the 50 and then see what happens there. Maybe we hit 50, bounce up, and then get the continuation lower. That would definitely be interesting. But right now, I'm expecting this to come down to my next level of support here at 52.37, which would be very close to the 21 EMA here on the 200-day average. Overall, 50-day neutral, 20 and 200 days slowly sloping into bearish territory. Moving over to the dollar here on the daily and the weekly, you can see we were holding up at this trend line, continues to act as resistance. We have the 21 EMA just behind there as well. And this does look like we're turning down off of that level here into next week. Daily momentum still slightly bullish here, but does look like we're rolling over going into Monday. The week was slightly bullish compared to the previous week, but momentum is still bearish, and we're below the SMA and the 50 line, waiting to see this start to turn back up to see if we're going to get any bullishness on the dollar. Right now, we're still kind of neutral because we have that bearishness on the weekly, but slight bullishness on the daily. Moving over to J&K, you can see here we're still in this wedge. Daily chart still wedging. Weekly chart, you can see it a little bit more clearly. Does look like we're coming back up to that previous resistance one more time, coming off of VWAP and the 21 EMA. We're at the 9 EMA here on the daily chart. We push through there, back up to resistance around 92.37. I would expect to find resistance at that level and then wait for the bigger breakdown. Momentum still bearish. RSI looking to retest the SMA. If we get a turn down off of that level, that's going to be very bearish. But you can see we did get a slight step up on volume with that most recent push up, which does make me think that this will probably have a little bit of follow through in my opinion. Weekly momentum, slightly bullish, but very minimal. Certainly could turn back towards bearish here soon. RSI right at the 50 line makes sense since we're in this wedge waiting for clear direction. You can see the 55 EMA sitting just above current prices, which in my opinion means that we're more likely to break to the downside, but certainly could go either way at this point. Moving over to TLT on the daily and the weekly, you can see we've been trending down on the daily, gapped up, made a slightly higher high, and then broke down to the 55 EMA on the daily chart. So this is now sideways price action here. We have a solid bottom in, we have a solid top in, waiting to see what happens. We are near this trend line of support, so we could certainly push back up to 107.44. That would be interesting. Weekly chart was a doji, so it could be a push down, doji, push back up. Still have the 55 EMA sitting up here, similar to J&K, so this could certainly be an area where we start to break down. Momentum starting to look a little bit more bearish. Got below the SMA on RSI as well, so weekly chart definitely not supporting more bullish price action, but this is still kind of a bullish wedge with higher highs setting up and flat top still at 108.84. So definitely interesting to see what happens going into next week. If we do push back up to this level, then you could probably expect that this is going to break higher eventually, and it's just taking a long time to do it. Finishing up with the charts here on the VIX, you can see we've been going sideways for a couple of days. Looked like we were trending down, and then we started to make slightly higher lows here. Definitely interesting. Momentum starting to move a little bit more bullish. Still a downtrend here, but establishing slightly higher lows. Weekly chart still looks super bearish, so momentum definitely bearish. RSI definitely bearish, making a lower low close here, but with a little bit of a wick. Last time we had some wicks, we were coming through this level and then eventually went higher, but you can see it took many, many weeks before we made that bigger push up. This could certainly be another situation like that where we start to get some wicks, couple of weeks of sideways action, and then we go higher based on what we've seen recently. So patience here on the VIX, not telling us a whole lot yet. Moving over to my accounts, on the week I was up about 847, which is pretty good considering that the NASDAQ was down 0.62%. I was up 0.87%, so pretty good differentiation there. In terms of positions, you can see I'm still long the IWM at 176. In terms of the NASDAQ, I'm neutral. I have 3 puts here, one at 314, 2 at 313, and 2 calls, 319 and 320. So expecting more sideways price action until the markets show us that they're going to trend one way or the other. Let me know down in the comment section what you think of the charts and what you've thought of earnings so far. Are we just going sideways until we get a bigger breakdown, or are we going to break higher from where we are now? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Definitely check out the Patreon and the Twitter also. And of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.